politics of our national security. I was a 4-H kid, and I spent my summer working on ranches.
One sec. Thank you. I haven't done that in a while. I've actually been really good, you got to admit. All right, there's some stuff I want you guys to hear real quick. We're going to listen to Robert F. Kennedy. He's just finalizing his part of this confirmation hearing, and I want you to hear what he has to say. He's a fucking badass. We got 15 minutes until the Fed speaks. We'll get to some talk before that, too.
But to make all of our people healthy again. There is no single culprit in chronic disease. Much as I have criticized certain industries and agencies, President Trump and I understand that most of their scientists and experts genuinely care about American health. Therefore, we will bring together all stakeholders in pursuit of this unifying goal. Before I conclude, I want to make sure the committee is clear about a few things. News reports have claimed that I'm anti-vaccine or any-industry. I am neither.
This sumbitch in the crowd trying to fucking go after him. They're going to remove her real quick.
I am pro-safety.
Gets good after that, though. Fuck you, bitch. Oop. Fuck you. Get the fuck out.
We'll have order.
Fuck you, Ken. All right.
Please proceed, Mr. Kennedy.
Kelly's awesome.
I am pro-safety.
He's right behind him.
I worked for years to raise awareness about the
here.
mercury and toxic chemicals in fish, and nobody called me anti-fish. And I believe that that vaccines play a critical role in healthcare. All of my kids are vaccinated. I've written many books on vaccines. My first book in 2014.
Yeah, so they go after him for being anti-vaccine. He's just anti the wrong vaccines. He wants to make sure that people are healthy and that they're not damaging their health by getting something that they shouldn't have that has never really been properly tested. There's key differences here.
The first line of it is, I am not anti-vaccine, and the last line is, I am not anti-vaccine.
That's his fucking book.
Nor am I the enemy of food producers. American farms are the bedrock of our culture, of our politics, of our national security. I was a 4-H kid, and I spent my summer working on ranches. I went to work with our farmers. I want to work with our farmers and food producers to remove burdensome regulations and unleash American ingenuity.
Fuck yeah.
MAHA simply cannot succeed without a partnership, a full partnership of American farmers. In my advocacy, I've often disturbed the status quo by asking uncomfortable questions.
Yes, sir.
Well, I'm not going to apologize for that. We have massive health problems in this country that we must face honestly. And the first thing I've done every morning for the past 20 years is to get on my knees and pray to God that he would put me in a position to end the chronic disease epidemic and to help America's children. That's why I'm so grateful to President Trump for the opportunity to sit before you today and seek your support and partnership in this endeavor. I will conclude with a promise.
Mike.
The members of this committee, to the president, and to all the tens of millions of parents across America, especially the moms, who have propelled this issue to center stage. Should I be so privileged as to be confirmed, we will make sure our tax dollars support healthy foods. We will scrutinize the chemical additives in our food supply. We will remove financial conflicts of interest from our agencies.
Fuck yeah.
We will create an honest, unbiased, gold standard science at HHS, accountable to the president, to Congress.
Gold standard means that when you have a study that comes out, you don't automatically take it at fucking face value, and you do more testing to ensure that it's actually factual. That's what a gold standard is, just to be clear. That and many other things.
And to the American people. We will reverse the chronic disease epidemic and put the nation back on the road to good health. Thank you.
Thank you. That's enough of that bullshit. You don't want to hear the other side. All right, let's get over here. I want to hear a little bit. There's going to be a little bit of chatter here on CNBC talking about what the statements that were released. They'll just go over it real quick. I'm going to just back up the truck just a hair. Let me get back here one more. Here we go. Cool. And we'll listen to them, and then I'll comment, and then we'll get ready for the show because we got about 9 minutes.
rates, even as the Fed has cut rates. So what do
Dude, I don't know if I feel like I look better from it. I don't know if there's maybe what do they have? Apple Intelligence. Maybe it's making me look prettier, but I'm liking it. My boobs look a little larger. I don't know if it's the working out or what, but I'm liking it. And it's definitely a fun new toy.
What do you and your team at Morgan Stanley see with rates and equities and bonds going forward?
So it's a really good question because effectively monetary policy is no longer the only game in town. Fiscal policy is going to play a major role. This is something that we all have to digest, we all have to take on board, and we all have to incorporate into our investment decision-making process. What the Trump administration is trying to do is have easier fiscal policy, taxes, deregulation, things like that, to generate growth and also keep inflation low. Those three things don't often hang together. So essentially, what the Trump administration is trying to do.
To be very clear, inflation is not as big of a deal if you're really pro-growth and you're doing all the right things. You're cutting on costs. You're increasing productivity. Unemployment's low. This is not the worst fucking problem to have. Okay, this is the best fucking problem to have. And I think even then we'll be able to maintain it at a controllable level.
Is through
because it'll be one-time inflation. It won't be money printing inflation, and money printing inflation is the dangerous thing because the process never stops. If you don't control your bills, the numbers keep getting bigger, and when the numbers keep getting bigger, you'll find out really quickly if you listen to Milton Friedman and a bunch of other really smart people that when you inflate the money supply, everything costs more. Just you divvy up the pie by a different fucking numerator.
Regulation.
People.
Move some of the business activity more to the mid-cap sector. So we still like the equity markets. We still think equities are a good investment, but we think it's true in the...
I don't listen to people that hate Elon. I really don't. I don't even fucking care. I don't care what their opinion is. Here's one thing that you guys need to learn in life. It's okay to not give a shit about somebody's opinion if you just know what they're saying is stupid and that you're more educated than they are. If they have something that's like new information where it's like, oh shit, I never thought about it that way, then you need to care. But I don't give a fuck whoever the fuck Phil is, has to say about not liking Elon Musk. The fact that he doesn't like him tells me he's a fucking idiot.
Broader markets, more in the mid-cap sectors, where some of the deregulation and fiscal growth policies might have the biggest impact. On bonds, we're relatively neutral. We don't think there's going to be a recession, so we think default risks stay relatively low. We think you're going to get the coupon in bonds, but I don't think much more than that. So essentially, it's really a balanced portfolio. But if you ask me, I'm a little bit more optimistic on the outcomes here, and I want to entertain the possibility of an upside. So I'm a little bit more positive on the equity side. However, it's more in the broader markets, cyclicals, materials, industrials, things of that nature. The mid-cap sector is more so than just large-cap tech.
I haven't heard so much excitement for mid-caps. I mean, maybe ever. But David, I was going to turn to you also as a wearing your strategist hat.
Such great
what are the
computers.
real-world investing implications?
Well, I think it's not about the economy. It really isn't. The economy is fine in terms of growth and jobs and profits and inflation. The real issue is that we've got some bubbly valuations here. We've got markets which are very concentrated. We've got portfolios which have drifted to be very...
People are buying Bitcoin and we hated it, JP Morgan.
Concentrated. I mean, a lot of people have a portfolio which is much riskier than it was 5 years ago. And meanwhile, we've got the potential for some of these administration policies.
See, inflation is mostly dependent upon the money printing, and with us removing a bunch of illegal immigrants from our country, we're going to keep unemployment low. We're not going to have to print as much money, and the lowering of rates will help stimulate the economy in very good ways that we've needed desperately for a long time, like the real estate sector. Can't they get a fucking break? Try being a realtor right now. These guys are getting fucked for years, depending upon where they are. 90% of them. Okay, they need a break. We've got all these commercial businesses that need to float debt. We've got all these small businesses that need to float debt, and they can't do it at really high rates, and our government certainly can't fucking deal with it. So we don't give a shit about the inflation number. We don't care about that. We don't care about that because if we're increasing productivity and we're growing and we're building wealth and we're cutting back on our bills, that's the shit that matters. The inflation thing that they like to spout off doesn't fucking matter, and it doesn't even come from that. You'll get temporary price movements. That's all that fucking matters. It's not a big deal. It's positive growth. It's what we fucking want. So when they talk about inflation, just hear blah, 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 because that's pretty much all it is.
Policies to disrupt things. So I think...
I feel like I have more energy.
people should really just don't look at the economy. Look at how you're positioned. Are you basically in too risky a portfolio? All said for the world of uncertainty that we have right now.
I like risk.
Hey guys,
David. It's the only way to make money. Go ahead, Steve.
For me,
Can you imagine a version of me where I've got tons of energy all the time? It's going to be frightening. It's going to be crazy.
far be it for me to steal Rick's thunder. I don't know if you have Rick coming up, but it looks like yields are a touch higher. And I'll give Brian the bingo award there, seeing this as a little bit hawkish. I think that's the way the bond market, I'm trying to get a beat on the probabilities. It still looks like there's an odds-on probability of that second cut in December, which is the thing that's been up and down, but just something worth watching. I got about 5 bips on the 10 and maybe 4 or 5 on the 2-year as well. So it does look like the market is digesting. This is just a bit hawkish.
Yeah, it's because the statement, Steve, they removed the cooling of labor and the lack of improvement on inflation. So.
Right, exactly.
Yeah, they sort of see those ticks moving, I guess, against them. All right, everybody, let's leave it there for right now. Let's get out to Rick for some more reaction in the bond market. We appreciate it.
All right, guys, let's not do the Bitcoin's down thing like the entire fucking conversation. It'll drive me mad. I don't care what happens to the price movement. Most of the time, whatever direction the price goes is completely off basis for where the price will end up by the end of all this anyway. And sometimes you don't even get the end of it until the next day. So let's not focus so much on that. Otherwise, I'll hide it. And let's just focus on the conversation, the dialogue, what's being said, what isn't being said. And we'll figure it all out. I'm going to take good notes this time, too. I'm going to pay attention. I might ignore chat for a little bit. Make sure I'm paying attention.
Steve, Stephanie, Jim, Karen, David, Kelly as well. Rick, you see this kind of back up in rates. When we say hawkish, it's so interesting to sit here at 2:11 Eastern, and a 5 basis point back up in rates can easily become a bloodbath, or we can just end up shaking it off in a couple of hours. Which way do you think this one goes?
Well, I think I would consider it much more serious, and it's not how many basis points that we're going up. In my opinion, it's where we have been holding. We've been holding 4.5%. We've been holding 4 3/4 in a 30-year, and there's a lot more going on under the hood.
Connor, the odds of me having a good afternoon are super fucking high because I'm in a great mood. So, thank you for asking. And if you're talking about this stuff, fuck, I don't know. Tesla, up or down, one of the two. And then what the Fed does, I mean, if Jerome Powell wants to actually be independent and show that he's independent and show that politics aren't persuading his judgment, then my guess would be that he has to say something positive about Doge and about some of the cuts that we're seeing, and he has to say something that's more positive about the fact that we haven't seen a lot in the way of tariffs, or at least that he hasn't casted judgment on that yet, and that they're going to be that, and then talk to some of the data that we've seen, the data that's kind of a mix of good, right? Like it's good. Unemployment isn't bad. He's got a few caveats where he can say, I don't think we should drop rates, but it's going to be really hard to keep that fucking attitude with Trump leaning on him every fucking day. But so again, he should give us something down the middle. He should give us something down the middle. If he does that, the market's going to like it. I can tell you that much. If he doesn't give us something down the middle and he's very biased towards like negativity, which I think would be the higher likelihood bias, then the markets will have a hard time. He'll have a fucking hard time. He'll have a very fucking hard time. So we'll see what happens, man. But I'm excited about it. It's going to be a good time. Dario, Jesse, guys, I trust his knowledge. I've been following him, and I saw people talking shit, but I also witnessed the Tesla boom happen right in front of me. Hey, man, I went up to 7 million. Now I'm down like low fives from what was negative 42,000 in 2019 or something like that. 42, 46. Fuck, I can't remember anymore. So I do have some wins underneath of me, if that's what you're referring to. Labango, my wife lost her work permit today, revoked by Trump today, but we have a plan B in Argentina. Shit, that sucks, dude. That actually really sucks. Revoked by Trump. Tell me more about how it happened. Like, what was it, and how long have you guys been here? Man Mahindra, breaking all federal employees who do not work in person by February 6th will get fired. What the fuck? Okay. As for Monty, while the committee said it considers risks to achieving its employment inflation goals is roughly in balance, it removed the statement that it's making progress towards the 2% goal. They shouldn't even be aiming for 2%, so I'm glad they removed that part. Thank you for sharing that, S. Romney. Rapture recap, Cynthia Loomis on X 23 minutes ago, one of the first orders of business will be to get the big Bitcoin strategic. Guys, there's plenty reasons to be happy right now. Let's listen to Rick Santelli and see if he has any.
Let's look at an intraday of twos. Okay, you can see what it's doing. Rates are moving up. But when you hook it into yesterday, what this did was this put today's yields above yesterday.
I want to speak to something else real quick. Sorry, Rick. I always interrupt Rick. Usually it's when he has a purple face, just because I'm entertained by it. But real quickly, so this is the 10-year, right? The 10-year has been trying to go up. It hasn't quite gotten there yet, but it has had a few wicks, which tells me that we're up for some downward pressure. We also have bearish divergence that started in, like, I don't know, what does this say? October of 2022. We've got bearish divergence. Well, I can't even say that, actually. It started in July of 2023, to be honest. That's when the bearish divergence really is confirmed. But going down, that's a long time, right? And then this going up. Has he started yet? Do I need to hop over to him real quick? Let's go over. He might be there yet. Let's just, we're going to bail on Rick.
Our goals over the past 2 years.
Let me go back.
People.
Where the data is, where we, where the economy is, being concerned about inflation first and foremost, like that. I mean, that's inappropriate. And that's what I imagine we'll hear from him.
What you just said is so.
Here he comes. Wow, he just came out and started talking right away.
Segment. It's going to be really important. Here's Jay Powell.
That's what happens, guys.
Good afternoon.
Bitcoin's up.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall.
Cleared his throat.
And has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated.
Somewhat.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Everybody fucking knows this, bro.
I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a
He's not going to commit to any future rate cuts, but he's going to talk soft, and that's what we talked about yesterday.
Broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
Employment is max.
We see the risks to achieving our employment and inflation goals as being roughly in balance.
That's good.
And we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks.
Blah, blah.
We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so.
All right, cool.
The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work. And that's how we best serve the public.
About this. That's good. That's a good answer.
Can you comment on whether he's physically communicated his demand to you?
I've had no contact. Thanks.
Nick.
All right, that's fine. That's good.
Nick Timmeros, The Wall Street Journal.
Nick,
Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive. And for that reason, we're going to be focusing on seeing real progress on inflation or alternatively some weakness in the labor market before we before we consider making adjustments.
Appointing a new Fed is tough.
Does the economy here warrant
The
meaningfully
legality of
restrictive
even
interest
firing
rates?
one,
And
but he probably
would
would
you
do it.
judge interest rates to still
Probably
be
would.
meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal.
The market is not hating what Papa Powell is saying. If you guys are looking, we're at 103,800. It's almost 104. So he's saying good stuff.
At the same time, we don't need to see further weakening in the labor market to achieve that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I would say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless, the last couple of readings have suggested, more positive readings. So I think policy is well positioned.
Colby from the New York Times. Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but this was not meant to send a signal other than this.
He doesn't sound like the angry hawk from his last speech, does he?
You can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations. And
I actually like Powell. I hope he plays ball and does what's right for America and our economy. And I think Trump is right about what that is, but I can also see why he might have fear of him pumping the economy too much with all the programs that are going to be implemented, because it's all very positive. So it's going to be a tug and war back and forth between these two. But I don't know. I just feel like Jerome's still going to get it done. We'll see. I could be wrong.
And they're highly uncertain in both directions. We know that economic forecasting is really difficult.
It is.
Beyond just a month or two out. So
yeah.
In the current situation, there's probably some elevated uncertainty because of significant policy shifts in those 4 areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policy is affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that.
I also don't actually think rates are the most important thing right now. The most important thing right now is lowering our expense base significantly. Let's get to $3 billion a day in savings so that we can, literally slash our deficit by 55-60%. And if we can do even better and get it to where we had a balanced budget, that would be fucking insane. And you would see Republicans be around for maybe another term after this one, maybe even a second one. They would just fucking destroy the market. They take everything, and the market would do really good. That's a better way of saying that. But I think that very positive things are coming. I know everybody wants a timely response from Powell, so I better get out of this real quick. So let's get back to this. But I think there's a lot of good stuff coming, and I think it's going to work out.
The Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you should hold?
Lower rates. I really don't think it does.
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster. We could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so
I just want to know what Trump calls Powell. He's going to give him a new nickname. I know it's coming. So it's going to be this is going to be one of the funnest parts about this entire thing, seeing the interaction between these two.
I feel like we don't need to be in a hurry to make any adjustments.
So to answer that, it's getting rid of immense amounts of waste won't necessarily crash the economy, and if you create a lot of efficiency, you actually can increase GDP, right? You can make it to where companies are more efficient, the government's more efficient, things cost less, but you're doing a better job. That's not bad. I don't know how to explain this kind of stuff. It's like, if it sounds like it would be a really great thing to have happen, and you think it's going to happen, it's going to be good, no matter what somebody else might tell you. It's going to be positive if you use common sense and think through it. So getting rid of a bunch of illegal immigrants might sound bad on paper, but again, majority not paying any taxes, getting paid, have a card to get paid to be here that we're having to expense out every single month. Getting rid of them is good. It lowers unemployment, because, again, you have less of a pool to pull from. It increases wages, which is good for everybody, the people that have lived here for a long time. And, again, you're getting criminals out and people that are pulling from the system and not giving to it. There's nothing wrong with that. It will be financially beneficial for our economy.
Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes, in answer to your first question. But to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Good answer.
Well, if I could just follow up quickly on that. I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
They're trying to force him.
I did mention consistent with applicable law, right?
He doesn't want to answer this question. They're trying to force him into a political statement that's leftist so that Trump can attack him, I think. I don't know what they're trying to do. But
just to follow up on Steve's question,
pull
what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
They hate Trump. They want to pull him in.
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each Teal book, you can look at the 5-year-old Teal books and see they're alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything.
And it's really difficult for him to gauge any of this stuff because it really depends on how things go with Trump and his organization and what they're trying to achieve and how quickly they can do it and how successful they are. So there's so many variables. It's really all over the place. If you have a really strong confidence that Trump and Elon and all these guys are going to do a good job, it makes it a lot easier. So we'll get to figure out over time kind of which way he's leaning.
So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see
testing,
owner's equivalent rent, and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now. And that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, then we seem to be set up for further progress.
Okay, cool.
But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
Under 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
Good question.
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance. When you've got
he's way more chill, Mike.
That has been pretty stable now for a full half year.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business.
Biden was much
you said
better
there's a
in the
broad
90s
range
for
of
talking.
possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise." Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?
It could stabilize.
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something.
Yeah, that's good. But here's the important part. The important part is that we don't destabilize the labor market and make it to where unemployment starts going higher. But I do feel him. Like, the border closing so abruptly is also something that's going to slow down the unemployment rate from going higher.
Something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe
You can't say much
we
here.
owe that to the public, and we believe we do that.
You can't be like, we're inefficient, we could do better. You can't do that.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation?
Another good
and
question.
Lowering them
Nice
have a
series
dramatic
in the
effect?
back here.
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well,
fuck that, man. Just to ask the question
2 weeks
about
ago, the Fed said it was withdrawing from the network for greening the financial system, even as
he should respond about lower energy prices.
In
Fuck
Los
that.
Angeles doing
That's
billions
bullshit.
of dollars in damage.
I'm sorry, that's bullshit. He asked him about energy prices and what he thinks if they come down. He should have fucking answered that question.
And of course, the NGFS, as you know, is a group
Congrats
to
on
talk
Iron.
about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure.
They shouldn't
I'd be glad
exist
to.
either.
So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, The work of
I
the
was a
NGFS
Democrat.
is
Elon Musk was. Robert F. Kennedy was.
Intended to, and this is a quote,
Donald
mobilize
Trump
mainstream
was.
finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, the process, this process dates back, thinking about it dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here.
Come on, Powell.
And this is when we got it and voted on it. So. And I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates.
Christ. People are falling asleep
to the
here.
NGFS. We have
Nobody gives a
criticism
fuck
of them,
about
but
this.
it just isn't. It's not right for the Fed.
Andrew.
Maybe. I might be able to, Justin.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask.
I think the thing that really matters is whether or not Trump is able to build out this economy with the offers to anybody who's spending $1 billion or more in the country, and for keeping all the corporate tax rates where they are, and all the CFOs are listening to everything he's saying. Again, no tax on tips, no tax on Social Security, all these things that he's going to be doing, along with reducing the size of government with Doge, and then again bringing in tens, hundreds of billions of dollars, maybe even potentially trillions over the next several years. I think these things are going to matter a lot more, and whether or not people are looking at America's debt as being something that might be sustainable in the future, and an even cleaner shirt than it was in the dirty laundry from before a year ago. And they're gonna bring down our bonds. They're gonna bring in the long end of the curve, and they're gonna bring it down. And that's what matters more than what the Fed does with rates right now. Because again, the 10-year is dropping. And if we look at what we're at right now, and sorry, I'm going to interrupt. The timeliness of this doesn't really fucking matter. The content does. And if we look at the 10-year, it's at 4.55, and I think we can get to 4, maybe even under, if people really start to believe in this government again, which is going to be important.
Ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that
Thanks,
you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think.
Created the problem,
I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Whatever, doesn't matter.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Powell's dropping the market. Uh-oh. Doesn't really matter.
Claire Jones from the Financial Times. 2 questions, if I may, on tariffs.
If earnings are still
first
good,
of all, we've seen global trade
we'll talk about
wars
earnings
before,
after this.
notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry,
what sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different. Now we've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases. And so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around.
It does look good.
It's not as concentrated in China as it was. There was a lot more manufacturing has moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018.
Yeah,
we didn't
right.
really
it did
know.
Come down a decent amount.
The range of possibilities very, very wide.
Not a ton, but
we don't know what's going to be tariffed. We don't know for how long or how much. What countries. We don't know about retaliation.
Hey, if you're going to talk about that shit, you better talk about Doge. Don't just talk about negative shit.
We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see.
Well, then tell us the game plan.
How it goes.
If you've done all that research, tell us the game plan.
Thank you. Courtney Brown from Axios. 2 unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting.
No, good question.
And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
Ooh, interesting. I actually don't hate these questions.
Let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above.
Now he's reading from the script.
I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant.
It's being very official.
As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
More nut appointments.
Simon Urbanovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So
this hasn't been bad.
And, it's long rates that matter for housing. So
I don't think people care about what he has to say.
I don't think. I think these higher rates are going to. They're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Wow. Jennifer. Crazy, Tippy. Not surprised, though. Why wouldn't you use it?
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress
Especially
on
for
inflation.
The really bad ones.
Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another.
No, he wouldn't be involved. He doesn't believe in CBDCs, and
I do
he doesn't care about the reserve.
We found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk.
I just got to say one thing. 71% of earnings so far, which we've reported, I don't even know what the exact percent is. It's a lot. I can pull that up in a second. Oh, I'm sorry. 21% reported, and 79% of earnings are beating at an average of 7%, and 20% are missing by a median of negative 3%. So earnings have been great. Forecasts aren't even that bad. And so if Tesla does well with earnings, if these other companies do well with earnings, with as far as we are in so far, 21% is a decent amount. They look good. They look good, and I think the market recovers from this and starts going up.
For banks and things like that. But it's just one of the four things asset prices are. And Yeah, I'd say they're elevated by many metrics right now.
Chill.
A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think.
I'm sorry, what the fuck happened with SoFi? What did you say? What did you say with SoFi? SoFi. Where is SoFi? Oh, you mean from their earnings? Oh, okay. I thought there was more news, but okay. Yeah, well, I mean, their forecast wasn't great, though, and they get butchered for that. But I think we're still going up.
About that, we look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you.
Awesome,
this
Jeff.
month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's also,
and if that happens, he's going to flip.
That
he's going to drop rates quick.
For lower income households, they're under significant pressure. And,
yeah, totally. He's right.
In the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level. Because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see it. There's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But you don't see that in the aggregate.
All my liberal friends say it's really hard to get cheap labor nowadays because we're used to the immigrant slaves that we can pay a lot less.
Thank you, Chair Powell. Nicholas Jasinski from Barron's.
Sorry, just saying what he knows.
Uncertainty is certainly a theme today. And I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way.
All right, I'm rooting for you, Pursuit.
If you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy?
Totally.
If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6.
He's not wrong.
And that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy. But then policies which are, not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I don't think, I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
I like that. That's the right response, I think.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
He's trying to get, yeah, it's smart.
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And, I mean, is that better than our expectations? If we expect to see that, it's just a question of when.
I think Trump's going to try and fire him. That's my guess.
Hi, Chair Powell. Scott Horsley from NPR.
I think he's going
In your 5-year review, you said the 2% inflation target won't be
not right away,
on the
but he
table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't. We said what we said was that at times when inflation persistently undershot 2%,
AI sell-off was a joke. Yeah.
We would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view, and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else.
Everything's bouncing back.
That part of it was irrelevant. The rest of the framework worked just fine as as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their 4%. Financial well-being, or do you think it has a place
PayPal up almost 1
in a household's portfolio?
CleanSpark up 2.6.
So our role with Bitcoin
MicroStrategy
really is to look at,
or
with
1.5
crypto really is to look at the banks. And you know, we think it's
shitcoins are popping.
You know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise.
That's some pretty good fart
do
coin.
That. You know, the threshold has been a little higher for banks engaging in crypto activities. And that's because they're so new, and you know, we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, you know, we're not against innovation.
This is so
and
good.
We certainly don't
this
want
is good.
To,
104.4 guys. 104.4.
You know, to terminate customers.
I told you he was going to pump markets. I fucking said it.
Of excess risk aversion, maybe
this is
related
good. This
to
is all good.
Regulation and supervision. So.
With respect to households and their inclusion in the asset plan?
You know, that's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have. And that's why we have, you know, the securities laws that we have. It's why, you know, if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to
if Tesla blows out earnings on top of this, it's going to get real weird.
Think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time.
We'll be good, Ryan. But I hear you.
With members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do.
I'm probably going to bounce after this, guys. I got somebody trying to message me like crazy, so I need to see who it is. But we can talk to it real quick. So 104.6, it's over. We're a little bit late anyway, so basically the market has reacted to this. Here's my take. He didn't say anything bad. He's not important right now. He did say the economy is strong, and it is. And he does acknowledge a little bit of what Trump is doing. Without acknowledging it, he's acknowledging that things are strong and they don't appear to be getting bad. And I do think that the tariff talk is subsiding from him, and he didn't really give any direction for what's happening in March. And we're gonna be doing good. We're gonna be doing good. Trump is kicking ass, guys. Let's just real quickly look over here at the Doge. Doge is now at $34.5 billion. It's jumped like $3.5 billion or more in just the last like 36 hours or something. It's insane. So we're already getting up to like almost that $3 billion a day level. If Elon can maintain this kind of pace, and Trump can keep doing what he's doing, he's playing fucking tennis with Serena Williams, one of the best female tennis players on this planet. And the man is not slowing down. He's not done. So I've just got to say, Trump looks like he's playing, or I should say, Jerome Powell looks like he's playing ball. He does not want to fight with Trump what fucking soever. He is kind of saying that, I don't really want to lower rates. And, you know, again, we're data dependent kind of going forward. But I do think that he could end up doing it. And I think even if he doesn't, it doesn't even fucking matter. Because what Trump and Elon are doing is what really, really matters. And we'll notice that more and more as the months go by. And we see these numbers getting better and better. And the world is bringing down the 10-year for the U.S. because they're looking and they're saying, fuck. This is good. Like, America is coming back. And if we just look at the 4-hour over here, we can get some semblance of that on the 10-hour here. Or the 10-year 4-hour chart. Let me just move this a little bit. So if you look right here, you can see how this just got slammed down in the last 4 hours. We went from about a 4.59% to 4.547. And again, that's not a huge move. You can see a really big one over here. But this has left a major wick on the 4-hour. And it's getting back down to like the 200 moving average on the 4-hour. So if this thing keeps dropping at the rate it is, this could be beautiful. We could actually end up testing down here on the daily and seeing the rate start to come down a little bit. And again, the move index is going down, the bond volatility index, the VIX is looking low. Solana is sitting at 4.23%. Let me just pull that over and show it. We got Solana sitting over here at 4.4% roughly, sitting right underneath this next fib level. Sorry, this is the 2-month. I'm going way out. But essentially, we're sitting in a really brilliant place right now, I think, for a lot of the market, and we're ready to bounce. And if those earnings that have already 79% have done 7% better on average are still pacing at that level, and the misses are like half that for percentage and only 21%, we're good. This is going to be really good. So we'll see what happens with Tesla. Here's the thing, guys. I can't. I got to take a break and get away. Jesse, bro, do you think SMCI is also keep on suffering the last 2 days because of AI and stuff? I don't think it will. If they report their fucking earnings and get shit right and don't have more audit concerns, then they can do really well. If they can't do a good job with these things, then they're going to suffer. But I think the broader market is going to do well. Again, it's going to be company specific. It's going to be investment specific. If you're not in the right investments and you're not in the right companies for the prevailing narrative and truth potentially, then you're not going to do as well. And I think we're going to do well, the people that are invested in what I'm invested in. Ryan R. Rex Finance did say miners would run. Just make sure you sell your MicroStrategy first. Okay. Yeah. I'm sorry. Did he say MicroStrategy was going to run first? Miners would run. Just make sure you sell your MicroStrategy. What did he say? Is that all him? I don't know. Maybe I'll watch it. But yeah, MicroStrategy up 2.2% right now, which means MSTX is hitting almost 4. Very solid, ready to bounce. MicroStrategy actually looks beautiful. Let me just show you this real quick. This is actually a gorgeous looking chart. So we back tested against support. It looks beautiful. It's all the way across, and it looks like it wants to rip and spring really hard and get back up to the 394 range before going higher. So I wouldn't count it out of MicroStrategy at all, and that's a good 58% probably to the next real level once we break above that. So once we get above 390s, and I think we could do it on our next tap up. Maybe we tap up and then we just have one little smaller dip and then we go higher, like a little tiny cup and handle. But I think we're going higher soon. I think we'll hold this support, and again, it's up 2.24%, so it's only getting better. And I think it's going to get up there fast. I think MicroStrategy is going to be awesome. And I think miners are going to go up a lot too. CleanSpark, let's just look at all of them real quick here. So CleanSpark, again, just wants to bounce. If you look down here, again, I say this is like a bullish pennant. It's retarded because it's just the size of the flagpole versus the actual pennant itself. But again, we spent tons of time up here and we couldn't do it, so we broke down. We spent time down here, a lot of it. Got above it, tested, found support, broke up, tried to go up through this, couldn't. Got down here, grinded that 200 moving average, the 100 moving average, trying to pull us up at the same time. This lower end of support, which again, I could even draw a little lower if I wanted to, but it doesn't matter too much. It still found it. And I think what it wants to do, it's had enough time to break down and it hasn't. I think it wants to break up. And I think the whole market does want to do that because that's what Bitcoin looks like it wants to do right now. Bitcoin in no way, if I just move this up to the top and pop it in here, it'll probably screw up the view down below. But there in no way to me is this bearish. And so again, this is why MicroStrategy looks good because it's doing the same setup. We're at almost 105,000 right now. I think that's great. If we look at the dollar, let's look at the dollar real quick. We'll just look at a bunch of things and how they're reacting, okay? So the dollar, again, we got rejected off of what has kind of been a trend line here, at least going back since 2001, so 24 years ago. And again, if we look at this, this is a 3-month chart, so there's a lot in here, right? So if you got 2 points, you really have 6 months worth of data points. So you can see where this rejected hard. And again, it tried to break up over here, but now it's starting to break down. Can it find support here? I don't know. But it is starting to retrace. And I think that's a good thing. The dollar weakness would be a beautiful thing to see right now. And if we look at oil, let's just look at oil. Oil has just been destroyed. I've said this so many fucking times, it hurts. But drill, baby, drill was not a lie. It was not a lie. It was a promise. And that is what will happen. And if we look here, guys, this trend line right here, this resistance line goes back to March of 2022. So many years ago, over 1,000 days, right? This is like a long fucking period of time. This has been a resistance level. They did a fake out, making it look like it was going to go up on this weekly candle, but it never closed. It closed underneath of it. Now it's rejecting like a motherfucker. So energy prices are coming down. The dollar is going down. Volatility isn't as high as it was, even in what happened the other day with this whole bullshit about DeepSeek. None of it fucking matters. And the market, to me, looks positioned to bounce. That's what I'm seeing right now. All we need is that 79% to continue with earnings. We need to see strong earnings. And it's okay if some people have weaker forecasts. A lot of the CFOs are more excited than they've been in a very long time. And if they get the tax breaks that Trump is talking about giving them, along with all the economic stuff that he's talking about doing, if these things come to fruition, if his nominees come to fruition, we are getting better, we are getting richer, and we will do really, really well. And you can have a bunch of bears that tell you the opposite of that. It won't make it fucking true. And yeah, that's my take on it. And right now I'm seeing strength. I'm seeing strength in the dollar against the Brazilian real, but just a little bit. Russia against the ruble, we're seeing a little bit, but really it's kind of flat. And China is stimulating. Canada, if you guys missed this earlier, Canada literally lowered their rates by 25 bips and they stopped their tightening. I think that's a sign of what could happen with our Fed, but I don't think it has to. But just everything points to easing and America doing well. And we were the cleanest shirt in the dirty laundry, and now we're by far the fucking cleanest shirt in the dirty laundry. There is nothing comparable to us. Maybe Bitcoin, right? Like, and we're the country doing all of that, along with all the crypto stuff. And then again, somebody just said, Cynthia Loomis just got done saying that the first order of business for her crypto council is to fucking, oh, I fucked that up. Cynthia... is to get a Bitcoin reserve in order. So, I mean, who can be negative about all of this? Who can be negative about what's happening right now? It's in here somewhere. I don't know. Oh, right here. One of the first orders of business will be to hold public hearings on a Bitcoin strategic reserve. That is exactly where you want to start. That is it. And again, the reason they're doing this is an executive order would be too weak. It could be easily overturned by the next administration. You don't want that. So you want to do it the right fucking way and do it through Congress. And that's exactly what we're doing. Trump is doing everything he fucking promised you he would do. Listen to him. Watch his actions. If he's not doing enough, call it out. I'm not fucking seeing it. So I don't know what to tell people. How can you be bearish during this fucking setup? We literally went through Joe Biden, Gary Gensler, Elizabeth Warren, anti-crypto, anti-business. And now that we have somebody in fucking office who means business and who will lower taxes and who will incentivize the world to come here while pressuring our friends and enemies to be a part of this or suffer. And you got some of the best, smartest people around in every one of these positions getting ready to be filled. So you could look at these two different things and see what the outcome will be, unless you're just too deep in the noise of listening to the bullshit coming from different media sources. I don't understand how you couldn't be excited right now. And that's to Rex Finance. I like him. I think he's a really smart guy. Why are you not fucking bullish right now? How can you not see this? How can all these people not see this? I don't know. It's so vivid to me. And maybe I have too many fucking screens. Maybe that's the problem. Maybe that's why I see it. I don't know. Maybe I have too many screens. But yeah. Hey, I used to go to Black Baptist churches when I was a young man. So I got to preach a little bit. I can't help it. It's just the way I was raised. Anyway, you should be bullish. you should be bullish. I'm just going to end with that. I'm not going to do the Tesla earnings, guys. Go to Herbert's channel. Watch James and Best Answers, Tesla Boomer Mama, the whole crew. Maybe someday I'll be on there. But watch those guys. Tell them to invite me next time. And if they invite me, I'll go. But watch them. I think great things are coming. I think if you have a really short time horizon right now, you might miss the forest from the trees. And I hope that you don't. I hope you don't. I hope everybody here can see what's coming and acknowledge it and embrace it and be fucking happy. Every day you get confirmation that this thesis is right, be happy. Be happy. Be excited. Because we're fucking lucky, man. I feel like we're like at the perfect time in history. And I don't know how you can't be incredibly grateful and excited to be at like the perfect moment in history. I know I am. And I'm going to make a shit ton of money during it, too. And I hope you guys do. I hope you do. I hope you have common sense, and I hope you can find the truth, and I hope it serves you well. But I do want to listen to something real quick. This is what we're going out with today, guys. I wish you luck on Tesla earnings. I will be right there. I'll be posting. It's going to be exciting. It's going to be fun. If there's noise over the short term, fucking ignore it. I'm actually hoping that they miss and that things are bad so that I can buy more calls. So that's where I'm at. But anyway, God bless all of you. I'm not really a religious person, but I love everybody, and I hope people see this train a coming, and they get on it. Peace out. I will see you guys tomorrow morning. Bye. Bitcoin next time. Yeah, I did. Big time.
When I was just a baby, my mama told me, son,